All right, hey everyone, this is Jack, and welcome to your free update. On the left hand side, you have the NASDAQ. On the right hand side of my charts, you have crude futures. The reason why I have both of these up at the same time is to talk about the correlation involved and the setups for continuations in both directions. So crude squeeze daily time frame looks pretty good for a long, right? But hold on, we have a fire line contending with like 111 half. My upside target on a conservative basis this week was actually 111 already. So, if you were in the futures room, we talked about crude futures, trading those in the form of USO and not so much crude futures, but with put credit spreads in the options world. Same thing, just trading futures synthetically through options. I think we still have more to this story. So it's not so that I have a target of 124 up into the previous highs. It's nothing like that. It's more about seeing what happens on Monday if equities get kind of an air bubble pop bid. In other words, if we're up in Monday morning session and crude gets to take another break lower, and maybe we chop around back down to about 108. That's kind of the last stop on the train, if you wanted to trade this higher for the next 7 to 15 days. Kind of take your pick, but the overall idea here is structure, 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 and this also creates kind of a mini double bounce here. But overall, you have one testing the low, two testing the low, and then kind of just these three here. And that's, obviously that's just a drawing. There's nothing technical about that, but it does outline the structure that you have, and complementary to that, you just generally have a really nice bullish squeeze, nice Ready Aim Fire Pro buy signal. And I don't love the yellow 10x bars, but that's okay. Typically, whenever we're squeezing, it's okay to see those. Okay, now, so on the left-hand side of your chart, what I really want to talk about is a NASDAQ possible continuation after what we've had, a little bit of another false air, bubble here in the downward trend that we've seen. This is a weekly time frame, by the way. The reason why I left this Fibonacci on here is because we bounced pretty much almost perfectly off of 11,900. That is the 1272, which is really important if you know about Fibonacci's. I've left this on for a long time just to kind of see, if we cross any lines, and this week we crossed the first one and we went all the way down to 11,700. So the next question that I have is, well, why not the 618? Why are we not about to just completely fall apart here? And I think it's still May. I think there's an argument for that, seeing the overall trend and kind of desperation of this market going lower. But that's just fluff talk and doesn't really hold anything in the ground as far as like actionable indicator proof or anything like that. So the question is we go back to moving averages, and I'm like, well, okay, let's say that there is a little bit of a bounce only up to about 12,530 or even about 630. Those are your previous daily high wicks, and those are just very easily looked at just using the cross plane field, and you can see your lower levels. So there is no squeeze that I'm keeping an eye on. The only thing that I have a problem with to the long side is this 3-day chart coming out of this squeeze and still firing. So the question is now, is Monday and Tuesday Monday or Tuesday, are we going to have some type of like continuation higher from today? So did the new cycle actually start today on Friday, or Thursday's afternoon, really, if we want to get hyper technical with the overnight gap up to make Friday what today was? And that seems like a good idea, to maybe come in here Monday or Tuesday, continuation higher, and then maybe going just completely berserk and falling apart before May Monthlies, or into May Monthlies, which is May 20th, 7 days out from now, next Friday. So it's pretty straightforward. It's like, well, you gotta really choose a road now, because now we have monthly expiration coming up, and crude is in a daily squeeze that has rejected lower lows and found some structure. So the question now is, in my portfolio, do I focus on selling put credit spreads in USO to have a long bias in energy? Do you trade XLE? Do you trade crude futures? Do you short equities and buy, oil? Those are all the big questions we'll be discussing on Monday and Tuesday. But if we do get bid up into about 12,600 on the Nasdaq, and the Dow and the S&P kind of follow suit, and everything's looking okay, we'll be looking for a short again. But I guess the overall message is, I think we're getting ready for one more big move into monthly expirations. It might just be again to the short side. And the best way to do that is to lure you into the long side with a really strong Monday and Tuesday. So that's the way I'm thinking about it. It's a stretch, but this market is very difficult to read. I'm just kind of sticking to my guns and looking at this as a continued short into a new kind of extreme, even though we've already hit the extreme and broke through that on Wednesday, and then Thursday kind of rallied and Friday gapped up here. So that's my take. We'll talk about gold, we'll talk about crude and all the things in the futures room and the day trading room. Join us if you're new. If you want to switch around and find a new room, we talk about micro futures and commodities a lot here in the futures room. So join me there. Hope to see you in the next update, and have a great weekend. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.